Welcome to ForexTV.com. Today's Tuesday, August 4th. I'm Tim Kelly with your New York Forex Market Buzz. Currency markets are trading in tight ranges with dollar almost unchanged against most majors from yesterday's close. Equity markets in the U.S. are in the green after positive economic data. Gold futures are higher and crude oil is surging after being down for most of today's session. The yield on the U.S. government 10-year note continues to climb, now up 6 basis points to 3.7%. Pending home sales increased for the 5th consecutive month in June, that according to a report released by the National Association of Realtors on Tuesday, with the increase in pending sales exceeding economist estimates by a wide margin. The report showed that the pending home sales index jumped 3.6% to 94.6 in June from an upwardly revised reading of 91.3 in May. Economists had been expecting a much more modest increase of about 0.7%. With personal income falling by more than expected and personal spending increasing by slightly more than expected, the Commerce Department released a report on Tuesday showing a notable decline in the personal savings rate in June. The Commerce Department said that personal income fell by 1.3% in the June month after increasing by a revised 1.3% for May. Economists had been expecting income to decrease by about 1% compared to the 1.4% increase originally reported for the previous month. Well, today we're joined by Greg Michalowski, VP of Trading and Liquidity at FXDD. Greg, welcome to the program.
Hey, thanks, Tim. Thanks for having me.
Always a pleasure, Greg. So you're back from the expo in Vegas and ready to attack the markets, I hope.
Yeah, it was a good show out there. Very appreciative of the people who came by, and I'm very happy to have met them all. But look forward to the market. I missed the move lower in the dollar yesterday, being at the show, but definitely had some effect on some of the chart patterns. Looking at them today.
Of course. Hey, why don't we get started, Greg? Let's talk euro dollar. Euro dollar surging. Right now, a little bit flat from yesterday's close, so we really haven't gone anywhere from yesterday's close. So you get a chance to get back in the saddle, recoup, and look at this market. What's your take here, Greg?
Yeah, Tim. We have been in a narrow range here relatively over the last couple of months. The high has been capped at about the 143.38. That happened at the beginning of June, and the low has been. We've had a floor around the 137.48, so only about 6 big figures in that euro over the last 2 months, which is you can narrow it up to maybe around 4 or maybe just a little less than that for where most of the trading activity took place. So yesterday's move above those levels, you expect to see some follow through buying at some point. What I don't want to see, and it may come still yet, but what I don't want to see is the market to move back into that range that we've established with 143.38 as the old high, and definitely I don't want to go below the 143.04. That would be more of a we're back into the mud, back into the regular area that we've been used to over the last couple months. So I'm keeping the hopes up for that the breakout was a significant breakout, and that we're going to see higher levels going forward with that caveat in mind on the downside.
Greg, I'm just looking at the daily going back for a while. It looks like there is some considerable upside. What do you have a target to the upside here?
Yeah, I do. If you take the high going back to July to the low, really in July 2008, and the low to October 2008, the 61.8% retracement comes in around the 146.21 level. And then, if you remember December, we had that big, huge squeeze up in the euro that took the price above, somewhere around the 147 area. So we're kind of that would be my target to the upside. Those two areas would be my target to the upside for the next step forward from a more longer-term basis on the breakout here at 143.38.
Okay. Greg, let's jump over to sterling. I'm looking at I got to go to the weekly on sterling, and Yeah, I haven't drawn a retracement there yet, but we use Ichimoku, and on the weekly basis, we are now trading above the Ichimoku cloud, which now turns that in our proprietary analysis turns that bullish here at 169. What's your take on sterling?
All right. Well, if I look at my weekly chart, I go back to the high of 2008 and connect it to the low, I guess, in January 2009. I think it was where it came in, and the 50% of the midpoint of that range comes in at 169.50. So we did make our way to the 170 level, which is always going to be, that's a tough level to get through just from a big figure number. And if you look at the activity this afternoon, or certainly during most of the New York session, that 169.50 level has found some sellers up there. I can look at a 5-minute chart here, and I see 1, 2, 3, 4 different times that the market went up toward that 169.50 level, again, that 50% level. And I think the market is using that as a ceiling to the top side right at the moment. Sterling's had a big move to the upside over the last few weeks. Certainly, we were down, close to 160 not long ago, and so going 10 big figures in 4 or 5 weeks is a pretty good move for that currency pair. So I think it may take some time off here, but a break of 169.50 might do another test of that 170 level, and we'll see how many shorts are out there.
Right. Okay, Greg, in terms of downside here, do you see anything that could stop this freight train that's sterling?
Only from a technical bias here, just as being an overbought situation as far as the sterling, and I think that might cause the market to have some profit taking in that currency pair. Of course, you're always, with the fundamentals out there, you're always a Moody's downgrade or some banking issue out of the UK, or some economic data doesn't come out as strong as they hoped, away from the market starting a correction to the downside as well. So with the whole economic environment being the way it is in this day and age, focus can turn from dollar weakness to sterling weakness on a dime. And also, if you have the stock market start to move down, maybe take some profits in that. What we've been seeing is the stock market goes up, and the sterling is supported by buying of other risk currency pairs like sterling yen, maybe sterling Swiss, stuff like that. Okay. So if the stock markets start to go down, you get some liquidation. Perhaps the sterling versus the dollar heads to the downside as well.
Okay, Greg, I think we're going to move this along here. You mentioned yen here. I'm just looking at the chart here now, and we have the weekly still trading below our Ichimoku cloud on our Pro Sticks. So we're kind of neutral on yen right now. What do you see in yen?
All right, if I put up a daily chart in the yen, and I see a nice channel forming from early April going down. We have a couple highs, at least 2 or 3 highs on the top bar, and at least 2 or 3 lows on the bottom bar of that channel. And in between, I'm looking at the 200-day moving average, and that 200-day moving average comes in right at around the levels right here at the 95.10 level, actually in the dollar yen. And also, if you look at the hourly chart in the dollar yen, the 100-hour moving average in the dollar yen comes in at the 95.10 level as well. So not only do you have the 200-day moving average, but you have the 100-hour moving average at the same price today, and that's significant. And if the market can close above it, it's coming down right now, trading around the 95.21 level, which is also below yesterday's close. But if the market can stay above that level, I think the upside would be favored, but it's not exactly running to the upside on the break to higher levels, and that has me a bit worried. Again, I like to see momentum on breaks of key levels like the euro. When the euro broke the old high, I want to see momentum to the upside. And the dollar yen, if we break two key moving averages on the same day, you like to see momentum to the upside. We're just doesn't seem like we're going to get it today, though.
Okay. Speaking of momentum, as we're speaking here, I'm seeing one pair we want to cover is Aussie. Aussie is and euro seem to be selling off here as we're speaking, about 20, 30 basis points. Aussie's had a nice run. It hit its 2009 highs and went above. What do you see in store for Aussie?
Well, you're right. I mean, it has had a nice run, and it seems, from the Reserve Bank of Australia's no rate change last night in comments that the hope for any sort of cut down the road is pretty much done. They're very happy with the way the economy's going. They're benefiting from from exports to China and the growth there. So everything's looking fine in the Aussie for the Aussie dollar. However, we do have a key level from a technical perspective again at the 83.80 level. This is a 61.8% retracement looking back on a longer-term chart for that. And last night, we came down and tested that level after the rate announcement, and the market had some profit taking in that currency pair. So we came down to the 83.80 level, and currently the market is sort of selling off from the bounce off of that level, trading around the 84 level at the moment. So again, it would be a technical sell for the Aussie versus dollar, just a profit-taking type correction, I see, because the fundamentals do point to a higher Aussie versus the dollar just because of the economic situation and where they are from a geographical standpoint in relation to China, which is obviously the hot spot and the area that people are most focused on right now.
Right. Hey, Greg, a great segment today. Appreciate you joining us. You appear to be well rested and on the top of your game today.
I don't know if I'm well rested, but I am. I do feel okay about my game today. So appreciate having me.
Yeah, hey, Greg, always a pleasure to have you on the show, and thanks for taking the time out.
My pleasure.
This has been your New York Forex Market Buzz with Greg Michalowski of FXDD. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.